Bitcoin, Ethereum, Dogecoin, BitDoge, Ethereum. When it comes to digital currency, do you get it? Do you understand it? I can tell you, I don't. I don't understand enough about it, and I want to. And so that's why we're here tonight. But I do have friends who get it. And the reason I want to learn about it is I'm tired of these phone conversations where they call me up. So here's a guy. He is a German comedian, and he expresses exactly the way I feel when somebody wants to talk to me about digital currency.
Hey, Flula, did you hear about Bitcoin? Oh, there is ICO coming, so you must make sure blockchain, ledger, DeFi, fintech, and you know about that, because Bitcoin go to the moon, Wall Street. Bet Globby Flaubies are now on sale. I did just check the alpha dogs, and did you go Discord server, Ruby Dooby? And then, yeah, the Blippy coins you can exchange for Clippy Clappy tubes. And don't forget about Blapsgraph and Snoopy Grib and Axis Cookie. Oh, Axis Cookie, everybody go for that. Well, immediately go to Gemini, Crack, and Crypto, Coinbase, Merpeeps. To the moon.
I need more Merpeeps. To the moon. All right. Tonight, we've got a real treat. Shawn Spruce, Dr. PerCap, is in the house. He's going to be talking to us about digital currencies. He's going to bring us up to speed on what this is, what it means, what it does, how to use it, how to get your hands on it, and all things digital right now. Shawn, my friend, how are you?
I'm doing great, Russ. As always, pleasure to be here.
That's good to have you back. Good to have you back. We've got some important stuff to talk about tonight.
We do.
And as I was thinking about this incredible topic here, one of your graphics, I want to go ahead and flash this up real quick. One of your graphics that you've got for your presentation tonight is this dollar that's kind of devolving into these ones and zeros, into this digital
binary code,
into the matrix, right?
Yeah, absolutely.
And so my wife and I were having a conversation the other night about currency, and I found this. I've got a 1921 silver dollar.
Ooh.
It's heavy. I mean, it's heavy.
That's
my
a beautiful
guess.
coin.
Thank you. My guess is it's probably worth more than $1 today. But yeah, I mean, it's got some heft to it. And 50 years later, they put Ike Eisenhower's face on a silver dollar. And who would have thunk that in 1971, which is the date on this coin, that his former vice president, Richard Nixon, would take us off the gold standard and not tie our money to anything but prayer and belief. In 2000, though, the mint gave us the Sacagawea dollar. It's a little bit bigger than a quarter. It's pretty. It looks nice. It's got a little heft to it. It's gold. And I'm sorry, I couldn't find a $1 bill because, being independently wealthy, I had to break out the 10. But if you take a look at this, if you can see this right at the top, this says Federal Reserve Note. These used to be silver certificates. They used to be gold certificates. They used to be tied to something, but they're not anymore. And so we're going to talk a little bit about how Bitcoin is the same, how Bitcoin is different. But I'm going to turn it over to you. Educate me on what is digital currency and why should I care?
Yeah. Great intro, Russ. I appreciate those coins. Beautiful. So digital currency has a history that goes back actually a couple of decades. The whole idea of digital currency as an alternative to actual cash is not that recent. However, it's really picked up steam within about the last 20 years or so. And it really started becoming a big deal after this last financial crisis that we had back in 2009, the big mortgage meltdown and the credit crunch. And you had people that walked away from that feeling very disillusioned and very just concerned about the safety and the security of specifically the US dollar. And it was an interesting dynamic because the concern was that, you know, this currency, it can be manipulated by governments. It can be strengthened. It can be weakened. They can create more of it in the form of loans and credit. And it just made people uneasy. And right about that time in 2009, a white paper was written that outlined this whole new idea of a digital currency, or a cryptocurrency as it's called sometimes, and how that digital currency could work. And in addition to that white paper, the author also created a website and also this whole blockchain technology, which is like a distributed ledger. It was actually like a framework for which to operate or house this digital currency. Now, this digital currency became what we know of today as Bitcoin. And I'm not going to tell you who wrote that paper. It's going to come up here in a little while. But initially, there was this white paper and this digital currency, and it's just really taken off now in recent years. And it has to do with, yeah, like you mentioned, like there's nothing backing our current currency. In fact, all the major currencies of the world, they're called fiat currencies, which is a currency that is not backed by a precious metal or a commodity. So yeah, like in the early 70s when Richard Nixon took us off the gold standard, we're no longer, it's just simply the faith and confidence that we place into that money. That's what actually gives value to that currency. So as long as we believe in it, as long as we have faith in it, it thrives. But if we don't have that faith, it doesn't thrive. And with people feeling disillusioned and losing trust and losing confidence in that currency, it left this gap for this alternative type of currency, digital currency, to emerge. And that's where we're at today. And currently there are more than 4,000 different digital currencies or cryptocurrencies in existence. The one we hear about so much, and the one I'm primarily going to talk about today, is Bitcoin, because it's the largest one and it's getting the most traction. It just broke the $60,000 mark just very recently. It set an all-time record. One individual Bitcoin is valued at over $60,000. So it's just this enormously huge wave of investors and opportunists. And it's interesting because right now we're in the midst of this really long extended bull market. It's historic. It's gone on really since that last recession ended back in 2009. And the stock market has just hit all these records. We have record housing prices. And people are just excited. They're excited and they've got money to spend. They want to invest. They want to get rich. And there's just a lot of speculating going on. We saw it last month with GameStop. We talked about that on our last broadcast and how crazy that got. And people are just looking for the next big thing, the next big opportunity, whether it be some penny stock like GameStop, whether it be one of these special purchase acquisition companies that are getting a lot of play in the media. And it's kind of frightening because it reminds me of back in 2009, we had, everybody was talking about collateralized debt obligations that were backed by subprime loans. And then back in 2000, or right around 2000, at the end of the dot-com bust, everybody was excited about these internet stocks, these new internet stocks, and any company that had .com listed behind it, people were just buying it, whether or not it had any kind of profitable history or any kind of, solid business plan. People just wanted it. So we're seeing that euphoria. Alan Greenspan at the time called it irrational exuberance, the former Fed chairman. And that phrase is stuck because anytime we talk about people just getting really excited about some investment or some market, it's kind of hazy and gray, and people are just throwing their money at it blindly. We call it irrational exuberance. And there's a lot of speculation that this whole wave of currency, cryptocurrency trading is just speculation, and people are just really, really excited about getting rich. And what's concerning about that is the original goal of creating Bitcoin specifically and some of the other cryptocurrencies was not about creating all this huge speculative investment. It was about creating an alternative, a different way to purchase goods and services, a different way to hold wealth in a decentralized format, meaning no government would be in control of that. And it's really kind of moved away from that. And now it's more of just this big trade and this hot speculation that a lot of investors are going through. So it's an alarming trend, but I get it. I mean, it's exciting when you think about the fact that 10 years ago, Bitcoin, one Bitcoin was worth less than one penny. And now that same Bitcoin is worth over $60,000. I mean, it's just insane, the amount of wealth and the amount of money that's being generated here through this digital currency. And how this all plays out, I think, is anybody's guess. But I'm going to talk a little bit more about the history and how we got to where we are now, and just how digital currencies work, and what the risks are, and what maybe the rewards might be, and just provide some insights. And as always, we're not here to provide any specific financial advice. This is never going to be a recommendation to go out and mortgage the house to load up on Bitcoin. That's not the message here. But we do want to give you folks information and ideas for how to make the most of your own finances.
Yeah. So you talked about a couple of things that I want to kind of touch on. Number one, we talked about the irrational exuberance, which we did talk about in our last broadcast with GameStop. And I think you're going to show us a graph in a minute that looks a lot like what we saw the GameStop stock doing, right?
Yeah. Yeah, absolutely.
And excuse me, we're also going to see a familiar face. You're going to give us a lineup here in a few minutes, right? And he's not just familiar to us, he's familiar to a lot of people. But it's funny how he shows up in both of these broadcasts. And pardon me. Here's what gets me is whether we're talking about GameStop or any other stock, whether we're talking about the housing bubble, whether we're talking about cryptocurrency or anything else, this is nothing new. Back in the 1630s, we had the Dutch tulip craze, where people were spending as much as 5 years worth of their wages on a single tulip bulb. And it's funny that one day somebody woke up and said, what is this? This is not worth 5 years of my labor. And the whole thing, it's like everybody woke up from this coma and it's like they've been hypnotized. And they said, yeah, you're right. This is just a tulip bulb. And the whole thing came crashing down. And at some point you have to wonder, is that what's going to happen here? Because you can't go out and earn Bitcoin, right? I mean,
well, you can if you're a miner. We'll talk about that, how Bitcoins are actually created and the people that create them and how they're incentivized, how they're compensated for that. But yeah, it's a totally different animal to what we're used to in terms of regular money that we deal with. It's just a completely new way of making payments, of holding wealth as a store of wealth. And it's fascinating, really, just thinking about that in terms of how it's changing. And it's just so much of technology in just the last 20 years, how it's completely, this whole idea of disruption, right? And replacing the old with the new. That's at the heart of what this whole Bitcoin mania, digital currency mania is all about.
Well, let's talk about mining. I think you've got a graphic here.
I do, yeah. So go ahead and put those up. Yeah. So let's just talk about who are these key players right now in terms of the digital currency revolution. So we've got 4 key players that we can talk about. First, we have the investors, and these are people that are buying Bitcoin. This could be regular people, individuals. This could be big businesses, and that's one thing that's really driving a lot of this Bitcoin mania right now. Is you've got some big investors that are moving in. You've got companies that are beginning to buy Bitcoin. You've got some billionaires that have recently taken some pretty big stakes in Bitcoin. So these folks are really driving the momentum. They're purchasing Bitcoin. They're trading Bitcoin. They're, just driving that heat, turning the burner. And then you have these miners, and these are the people that actually verify transactions through Bitcoin's blockchain distributed ledger, which is the actual platform or the infrastructure with which Bitcoin is actually how it's actually used Okay, so these miners, they're compensated based on the amount of whether or not they're how quickly they can actually authenticate these transactions. I'll talk a little bit more about how that works here shortly, but essentially they are monetized. They receive an award in the form of Bitcoin for when they authenticate these Bitcoin transactions. And then you've got exchanges. Okay, and there's a lot of them now. There's tons of them. I said earlier, there's over 4,000 digital currencies. There's a ton of different exchanges where people can actually purchase Bitcoin. And some of these exchanges are making a lot of money. Some of them have failed miserably. Some of them have imploded. There have been some huge scandals with regard to exchanges going belly up, and a lot of really horrible stories of fraud and Ponzi schemes. But again, they're a major player in this whole endeavor. And then you have all these support services specifically for the technology, the blockchain technology that allows Bitcoin and some of these other digital currencies to operate. So these are the software developers. These are the people that are making the mobile apps, especially for the miners. They need really sophisticated computer systems to actually mine Bitcoin. I mean, we're talking heavy duty servers, really super ultra fast rigs. So graphics cards, things like that. You know, there's a lot of demand for those types of services as well. So there's a lot of people that are making a lot of money off of this whole digital currency revolution.
Wow. Okay.
Okay.
When we think about real dollars, when we think about, we have a mint, we have a place that actually stamps those coins, and we have a place that prints the dollars and slices them apart and bundles them and distributes them to banks. Talk to us about how this is different.
Okay, so this chart here just shows how a Bitcoin is minted. So how one is actually created, and it's interesting that Bitcoin is actually a closed system. There's a limited supply. So there's the potential to have 21 million Bitcoins in total. Okay, that's it. Once those 21 million Bitcoins are minted, there will be no more. Currently, at present, about 18.5 million Bitcoin have been minted already. So there's only about a little over 2 million that can be minted in the future. So the way this works is a person has a digital wallet, okay? And a digital wallet is really just software that allows them to access this blockchain, okay? It allows that. So, and this is this is why a lot of people are excited about Bitcoin in terms of a revolutionary type of currency, because it allows a high level of control and security over your money. So think of it like a push and a pull, okay? When you make a purchase with a debit card or you make a purchase with a credit card, think of it like a pull. You're basically just giving your credit card information or your debit card information to that vendor. They have complete access to it. And then they just pull out as much money as they want. And you trust them that they're going to pull out exactly how much money that you intend for them to pull out, and it's going to be safe, right? But it's also risky because you're giving them complete access to that account. Where Bitcoin is different, think of it like a push. All you're doing is just pushing that money out of your digital wallet, but the actual person receiving that Bitcoin doesn't have any access to that wallet. So it's safer in that regard. In some ways, it's kind of like where we're going with PayPal, right? In some of these mobile payment systems, because rather than give you access to the bank account, they just have access to your PayPal account, and it's limited. They can't get to the you might have hundreds of thousands of dollars in your bank account. They can't get to that. All they can get to is what you put in that PayPal account. So in that regard, it's considered safer in some ways. And again, you don't have this, but you don't have a third party. There's no bank that's behind any of this, no trusted third party. It's simply a wallet that accesses this blockchain, and this transaction is then bundled into a block with a bunch of other transactions. And usually on average, there's about 500 individual transactions in each one of these blocks, okay? And then that block gets sent out to this network of computers, okay? And there's thousands of them. Thousands of networks, and sometimes they're called nodes, and they're public. Okay, like anybody can could create one of these computers and get on this blockchain and be part of this. Okay. So then these computers, they go to work verifying this transaction and this block of transactions. And like I said earlier, it's about 500 transactions per block on average. And it's fast. It usually, a block is usually verified in about 10 minutes. And that's another thing about what's so fantastic and so exciting about this technology is that it's a lot faster to ultimately verify a transaction than it would be like with a regular debit card or a credit card or a type of electronic payment, a conventional payment. Right. Because even though like I might go make a purchase and I might put my debit card and use a chip reader or whatever, and that purchase is instantaneous. You know, I get the merchandise, whatever. But the actual verification, the time it takes for that to actually go through my bank, and ultimately they just vouch for it essentially while I make the purchase, but it ultimately has to be verified. And that verification process does take a couple of days usually, sometimes longer. With blockchain, that can take about 10 minutes. So it's just lightning fast in that regard. But it's also slower in another sense in that the blockchain technology right now, like they can only do about seven Bitcoin transactions a minute right now. That's it, about 7 transactions, as opposed to like Visa and MasterCard, they can process like 50,000 they can do like 50,000 transactions in a second. I mean, they're just super, super fast. So even though the transaction speed is a little bit is slower, it doesn't have the same capability, the verification time is greatly, greatly increased compared to conventional currency. So it goes into this network of these computers and they race to solve, and it's a very complicated mathematical algorithm. It's not easy to do. You couldn't just jump on with your, with my 12-year-old Sony laptop and start mining Bitcoin and verifying these transactions. You've got to have a hot rod setup. Costs, like I said earlier, people spend a lot of money getting their rigs in order. In fact, for some people, it's more expensive to create a mining rig, a Bitcoin mining rig, than to actually make money actually mining it. It's so hard. And some people team up and they create these teams. But anyway, once it's verified, once this block of transactions, and like I said, it's usually about 500 transactions, they are added to this ledger. It's called a shared ledger or a distributed ledger. And now it's permanent. This ledger is a database that contains the payment history of every Bitcoin in circulation. And it also provides proof of who owns any Bitcoin at any given time. So as these blocks are added to the ledger just grows and it becomes this living, almost breathing database of information. It's this whole new way to verify information, to keep records. And the potential for this is huge. And a lot of people, especially early on when Bitcoin really started taking off, is people were more excited about the technology behind blockchain than they were about Bitcoin, because the applications are huge. I mean, governments can use blockchain for like title offices and things like that. NASDAQ's talked about using blockchain to verify trading of stocks. And Walmart uses blockchain to verify like pork in China to see where its origins are from, and it's endless. I mean, medical records, pretty much everything eventually at some point could potentially be stored and records maintained using blockchain. But again, it's all through this really cool distributed ledger system. So ultimately these blocks are added to this big blockchain, and then the miners whose computers are first to verify the transactions, they are awarded or rewarded actually new Bitcoins. They're compensated with new Bitcoins. And currently for every block of blockchain that's created or verified, the miners receive 6.25 Bitcoins. 6.25. So as you can imagine, it's enormously competitive to create Bitcoins.
And you said they're how much each?
Well, I'd like to. They broke 60,000 over the weekend, I think. But I checked this afternoon. I think Bitcoin was trading at about $55,000 a unit. So and I mean, like I said earlier, I mean, there for a long time, Bitcoin was well under it was less than a penny for a Bitcoin. So it's just blown up. It's just absolutely blown up. So Yeah, that's how a Bitcoin is created, and it's interesting. It's fascinating.
And it took some pretty sharp cookies to come up with this. And I know you've got a list of winners and losers. Can we talk about those?
Yeah, absolutely. Let's look at the winners and losers. So our first out, let's start at the top middle there, and let's talk about this Satoshi Nakamoto. And there's 3 question marks. So earlier I mentioned this white paper and the creation of blockchain, the code that created blockchain, and the website that was actually created by this individual, Satoshi Nakamoto, who's credited with being the inventor, the creator of Bitcoin. The only problem is Satoshi Nakamoto is not a real person. And this is one of like the greatest mysteries of the modern century here, who this person is. People don't know. It could be an individual, but some people think it's actually a team of individuals, of coders. At one point, there was a rumor going around that it was this hermit, eccentric coding genius that lived in the mountains of Japan. Elon Musk there was speculation he was Satoshi Nakamoto. There actually is a real person named Satoshi Nakamoto, but he's this older Japanese gentleman that lives in California, I think, and he takes care of his 90-year-old mother, and he has no involvement at all with cryptocurrencies. He's totally not there.
You think that's great cover, though. Think about it.
Well, there's a lot of speculation that it's that Satoshi, that the person who created was a libertarian or is a libertarian, and they're just really like anti-big government. They're really critical of the banking system, and all that code and the creation of Bitcoin really aligns with that last big financial crisis, and they see that as like a repercussion of that, kind of a backlash against that. And I don't know. I sometimes I think maybe he's Penn Jillette. Because Penn Jillette he's like a hardcore, like diehard libertarian. And I don't know anybody else who could pull a vanishing act off like that.
That's true. Yeah. And so, the taller half of Penn and Teller.
Yeah. The ponytail one. Yeah. The big husky guy. So anyway, this is like it's like Who Shot JR? And I'm sorry, I'm showing my age here, but who, and it's weird because they say that if this person ever does come forward, that it could actually cause the value of Bitcoin to plummet, just because it would simply put this identity to it, and it would just change all the dynamics tremendously. But whoever this person is, or this group of individuals, he is rich, because it's estimated that Satoshi Nakamoto has about 1 million Bitcoins. So whoever, they're sitting on a pile of wealth right now. So
better off remaining a man of mystery.
Probably. This next person, let's just go counterclockwise. So Vitalik Buterin. So this is a gentleman that created another cryptocurrency called Ether or Etherium, and it's between Bitcoin and Ether, the two are kind of the big dogs in the cryptocurrency world right now. They get a lot of play, a lot of information. And this guy just, he created Ether, and it's a little bit different than Bitcoin. It is a decentralized currency. It has a lot of the same features, but it doesn't have a limited supply. Every year they create or they produce more of these digital coins through Ethereum. So every year there's a new supply that's created. And it's also, it uses blockchain a lot more, and that it's actually using blockchain to like manage financial contracts and applications and things like that. So originally it was created to kind of work alongside Bitcoin and support it, but now it's kind of seen more as a competitor. This is an interesting guy. He publishes a magazine or an online magazine about digital currencies and cryptocurrencies. So he's just a really interesting person. Obviously, he's made a lot of money with his inventions or his innovations. So he's a winner at this point. Let's look at Warren Buffett down there in the left-hand corner. So Warren Buffett, over the years. He's done okay. He's in the 90 for 90 club. He's now 90 years old, and he's worth about $90 billion. So pretty exclusive company. A famous stock picking guru from Omaha, Nebraska, who's just made a fortune many, many times over. But he's old school, Russ. He's real old school. doesn't like digital currencies, doesn't like Bitcoin. He's not buying it. He's super critical of it, thinks it's all BS, thinks it's smoke and mirrors. In fact, he still pitches the old song he's been pitching all his life. Oh, index funds, you know, play it safe, buy and hold kind of stuff. So he has not bought any Bitcoin. In fact, they even interviewed him after Bitcoin hit $60,000, and they said, "Hey, would you consider maybe changing your opinion on this?" And he's still holding down. He's doubling down on anti-Bitcoin, anti-cryptocurrency. And I don't know what to think, because Warren Buffett's been on what appeared to be some wrong trades in the past, and he always seems to come up smelling like a rose through thick and thin. So he might just pull this one off. I don't know. Let's look at Jared Kenna. So he was one of the first Bitcoin millionaires, and he actually created the first United States cryptocurrency exchange. It was called Trade Hill, and just made a lot of money, but picked up Bitcoins when they were like 20 cents each and just made a ton of money. But he's an idealist. And his whole vision, he really bought into Bitcoin and digital currency because of this whole idea of revolutionizing currency, decentralization, and just, you know, the idea that it could negate inflation and combat poverty. He didn't want it to blow up, and he's gotten really disillusioned because of all the speculation, all the people making all kinds of money. So he's gotten rid of all his cryptocurrency at this point. Last I heard, he only had like 1 Bitcoin or half a Bitcoin left. He's one of those typical kind of angst millennials, you know, oh man, I my goal was to save the world and I wound up a millionaire. Oh no, what am I going to do? He's even got those puppy dog eyes to prove it, man. So, I don't know. Then we have Elon Musk. Russ, we can't do one of these without bringing Elon Musk into the picture, right?
He's everywhere.
He is everywhere. Anything controversial related to the markets, to the economy, he's just involved. And Tesla, his company, recently purchased about $1.5 billion worth of Bitcoin. And their plan is to allow Bitcoin to be used to purchase Teslas. And he's been really vocal about cryptocurrencies in the past. He's done a lot of tweets. In fact, he's done tweets for Bitcoin and Dogecoin. What is it? Dogecoin. Am I pronouncing that right? I can never pronounce that right.
You're asking the wrong guy.
Okay. But some of these tweets have been linked to, you know, some big price spikes for Bitcoin and some of these other digital currencies that he's really a big fan of. But, you know, he's just always, you just never can tell with this guy what his ulterior motive is. And if, does he really believe in this, or does he just, you know, think it's just crazy and fun to jump on board and be a part of this? I don't really know. But at any rate, he's in it. He seems
like a pot stirrer, right? He likes to stir the pot.
He does. He does.
Whatever pot he comes across, he just likes to stir it.
Absolutely. Absolutely. And then we have the Winklevoss Twins. So some of you folks might remember these guys. There's Cameron and Taylor, and they became famous during the whole Facebook. And anybody who saw that movie, The Social Network, all about the history of Facebook and how they alleged that they actually created the original Facebook and the whole platform for it. And Mark Zuckerberg stole it. And ultimately, they settled with him for about $65 million. They got out of that deal. And they're credited with being actually the first now digital currency billionaires. They started the Gemini exchange, and they loaded up on a ton of Bitcoin when it was right about $1.20, $1.30, and they have just made a fortune. So they've had a great second act. I mean, maybe they lost out on Facebook, and they also lost out on the Olympics, because I know they made the Olympic team, and they didn't medal at the Beijing Olympics, but they've had a great second act. At this rate, they might wind up richer than Mark Zuckerberg getting into this whole cryptocurrency thing. But I'll tell you what, Russ, I mean, for the life of me, I've never seen two identical twins look more identical than these guys. I mean, I can never tell which is, don't ask me which is Cameron and which is Taylor. I have like no idea, but I don't know, maybe we could ask Armie Hammer, and if he's not too busy munching on a plate of ribs, maybe he could enlighten us. I don't know. I just don't want to know where those ribs came from. I don't know.
No. Well, so you've said a couple times, some of the players seem to have a libertarian bent, and I know that one of the driving forces behind this was so that the government couldn't have a hand in it or get their mitts on it. But I read an article just yesterday that the Indian government is looking at banning cryptocurrencies of all stripes. They're going to, and some countries have banned the trading and the mining, but not the holding, the possession of the the digital currencies. But India is looking at banning it from top to bottom, with the bonus that they want to create their own state cryptocurrency. Seems a little counter to the whole movement, doesn't it?
It does, but you know what's happening here is people are just jumping in. It's gotten so much momentum that a lot of these big businesses and governments just can't afford to look the other way now. In fact, last year in the United States, they held congressional hearings with the idea of creating a national digital currency for the U.S. government. So wow. A lot of governments are looking at this, and you know what? It really comes down to, I think there's two ways to look at this. Do you consider Bitcoin and other digital currencies? Do you consider them currencies, or do you consider them commodities? It's one or the other. And what's happening now, and what's driving a lot of this, is people are looking at these like commodities. And if you really want this to be like an actual alternative to the US dollar, do you want a currency that just has these wild price fluctuations and goes from less than a penny to $60,000 in 10 years? Here's a chart, and this doesn't go all the way back to the early days of Bitcoin. It goes back to September 2014, but you can see how it's just this just insane growth. And specifically, I mean, just back in September of last year, less than what 6-7 months ago, one Bitcoin was about $10,000. So we've had like a 6-fold increase just within less than a year. Wow. So this thing is just to the moon, but it's volatile. It just goes up and down. And, okay, the US dollar might not be perfect, but I don't like to see charts like that when it comes to the currency that I have my retirement savings in, the currency that I'm paid in, the currency that I use to pay my daughter's allowance. That just doesn't make me feel good. So
you know who it does make feel good, Shawn? It makes Russ Okung feel good. Russ Okung is is a tackle for the Carolina Panthers, and he asked that half of his salary be paid in Bitcoin, and it has now caused him to be the highest paid player in the NFL. But I'm kind of like you. I'm a little more conservative. You and I are Gen X guys, and Russ Okung is a little younger, and so his risk tolerance seems to be a little bit higher than we have as we get closer to retirement age. But this is not the only crazy looking chart. Can we look at the next one?
Yeah, so let's take a look at Ether. Again, this is so a lot of times you hear it called Ether, Ethereum. Ethereum is technically the blockchain that runs Ether, and Ethereum actually supports several cryptocurrencies in addition to Ether. But this is Ether going back to August of 2015. And again, highly volatile, not trading nearly as high as Bitcoin at this point, under $2,000. But it's, if you go back a few years ago, it was worth fractions of a penny. And now it's worth, $2,000 is a lot of money. So again, this is another digital currency. There's over 4,000 of them. There are just tons of them. And that's the question a lot of investors have.
That's why I'm getting in on the front end of that Dr. Per-Cap coin that comes out next week.
We got to create our own. Russ, we got to create a digital currency. We got to do it, man. I don't know. What are we going to call it? I don't know.
I like Dr. Per-Cap coin. It's got a ring to it, brother. It's got a ring to it. No, I'm sorry. I didn't mean to jump in there, but you're right. I mean, there were 4,000. Are there even that many official currencies, physical currencies in the world?
I can't imagine there would be, because there aren't 4,000 countries in the world. So, and that's the question, like, ultimately, okay, let's say this really does work. And this whole thing, it works. And ultimately, the world just transitions to these digital currencies. Well, which one is ultimately, or which few are ultimately going to emerge as the winners in all of this? Because if you go back 20 years ago in the early days of the internet, it wasn't a given that Amazon was going to become Amazon. You know, you go back, Facebook had MySpace. And in fact, for a long time, MySpace was a more popular platform. It had more users. It had more traction. And ultimately, Facebook emerged. So, you know, does Bitcoin, are they king of the hill? Can they stay there? How long can they be there? There's just so many questions in terms of, you know, how this could all play out. But yeah, there's just, it's, you know, and anytime you have, I mean, people are just creating these things just to try and make a quick buck. And the scams and the fraud that go around with some of these cryptocurrencies is just off the charts. I mean, it's just really, really problematic, and accounts get hacked all the time. And of course, some of the exchanges seem to be a little safer than others, but again, you don't have a regulator involved. There's no trusted third party. There's no FDIC insurance in case, you know, your wallet, you know, whoever you have your wallet through, they go bust. I mean, you're just on your own with this stuff. And I think people really need to understand that.
Right. Right.
Let's take a look at this other chart here, market cap. So if you just take the overall value of some of these different markets or these asset classes, so let's take a look here. The New York Stock Exchange, that's the largest stock exchange in the world. So if you take all those individual stocks, all those companies, collectively, that's about $25 trillion worth of market cap. So that's a lot of money, right? If you take our M2 monetary supply, so this is the US dollar. And what this is it's a measurement of all outstanding US currency, in addition to all the checking, savings accounts, certificates of deposit, money markets. All that money combined is less than $20 trillion. The gold market, all the gold out there, between 10 and $11 trillion. And then you have Bitcoin. So right now, Bitcoin, all the Bitcoin out there, remember there's about 18.5 million Bitcoin that have been mined. It has the potential to mine a total of 21 million coins. It's worth about $1 trillion right now, a little over $1 trillion. So tiny, minuscule still, compared to, you know, the US dollar, even compared to the gold market. So it's still a tiny, tiny little asset class. So again, some of these excited investors, these speculators see huge growth potential. And Ether's even smaller than that. So in the grand scheme of things, it's still a little dog here. It's not yet even close to the big dogs, but you know, how high it's going to grow, where it's going to be is anybody's guess. I mean, there's a lot of people right now that say Bitcoin is destined to be to hit $100,000 this year in 2021.
Be interesting to see what the chart looks like a year from now, 5 years from now, 10 years from now.
Well, you know, they've had some huge crashes. In 2018, there was a huge crash. It lost about 62% of its value. In 2013, back in 2013, at one point, Bitcoin was trading at about $13 and it shot up to over $1,100. And then there was a huge crash. So, you know, it's really volatile. That's one thing, you know, I have for people that have been, you know, anybody that's ever like invested in Bitcoin, you know, your balances just fluctuate, you know, just crazy spikes, 30% up one day, 30% down the next day. It's really, really volatile.
Makes me a little queasy. Makes me a little queasy.
It's definitely not something you'd want to put more money in than you could afford to lose.
No,
sure.
No, definitely not. But you know, when I get queasy, I don't feel like eating pizza. So talk to us about pizza.
Okay. So this is a timeline. We go back to 2008, that white paper I talked about, you know, the blockchain technology, the code, all that stuff. In 2010, this was actually, they call this Bitcoin Pizza Day. And it's credited with being like the first official transaction with Bitcoin. And this programmer, his name was Laszlo Heinrichs, and he traded 10,000 Bitcoins for 2 pizzas. And at the time, Bitcoin was less than a penny. So he bought 2 pizzas with it, and holy cow! I mean, now those 10,000 coins would be worth like, you know, like $600 million. So anyway, that's you know, that's kind of what got things turning, and people say, hey, we could actually really this might actually really be something that people actually could use to make purchases and whatnot. So you can just see how, those first few years, it was just really mired with a lot of scandals, a lot of corruption. The Silk Road Marketplace hack, that was an online drug selling haven that was investigated in 2013. And ultimately, the guy who started was based in San Francisco. He got indicted. But during that whole process, a huge amount of Bitcoin that he was using to facilitate his transactions was hacked from his account. And it just was this huge mess. And then the Mt. Gox Bitcoin exchange that was in Tokyo, that collapsed. And there was a lot of money lost in that. 2017 is when the Winklevoss Twins became billionaires. We had the 2018 crash. Facebook back in 2019, like I said earlier, like a lot of companies, a lot of governments, they're either buying crypto or they're getting involved in crypto. Facebook in 2019 announced that they were going to create their own cryptocurrency called the Libra. And I'm kind of a fan of that because my birthday's in October.
Oh, there you go.
But the regulators just came on them. Big guns. Their original plan was to just use it so people could make purchases on Facebook because, they've got kind of like a Craigslist thing going. You can do everything on Facebook. But regulators have really hammered that and they put those plans on hold. I mentioned earlier those congressional hearings to create a digital US dollar. So, it's definitely gaining traction. It's definitely becoming more mainstream. MasterCard is going to start facilitating Bitcoin payments. Mellon Bank of New York, they invested in Bitcoin. I mentioned Tesla earlier. So, and I think with these big companies and some of these governments, they're just hedging their bets. I don't know that they really are really that big on crypto at this point, but they just think, well, you never know. And we might as well just kind of get in on this just in case. So I think that's what you're seeing with a lot of this momentum, a lot of this traction.
Well, there does seem to be a lot of bullishness.
Yeah, there really is. There is a ton of bullishness right now. And so why is that? What is driving this? And a lot of what's driving this whole cryptocurrency craze is the same thing that's driving these record gains in the stock market. There's just a lot of money right now. People are flush with cash. There's a lot of increased savings. And because of the pandemic, people are at home. They're not traveling. They're not going shopping as much. And people have money to invest. And they have money that they're willing to put to risk, and they have money that they're willing to speculate. So it's crazy. Like the savings rate for a long time in the United States, we had negative savings rates, and per capita, the average person was saving no money. They were actually going into debt annually every year. And now savings rate has gone way up. There's a lot more money in checking accounts and savings accounts. A lot of this has to do with the stimulus that's gone out. We got there were payments last year. Now they just signed off on that 1.9, that's next installment, $1.9 trillion of stimulus. More direct payments are going to be going out to a lot of Americans. So people have money to throw into these markets right now. You also have really low interest rates. So at this point, why am I going to put my money in a CD? Why am I going to put my money in the bank when I'm not going to hardly earn anything on it? Right. So people are putting their money into things like this. And then you just have so many hot assets right now. Stocks are hot. We talked about, some of these other types of investments. People are just excited. They're optimistic. They think, just good things are going to happen, kind of turned corner on this pandemic. It looks like these vaccines are working. And, there's just all this money on the sidelines, and the economy is just going to go into high gear. We're just going to come roaring back. And people think that's a good sign, and they want to be a part of it. There's also supply and demand issues, specifically with regard to Bitcoin. And this is interesting, but between August and December of last year, there were about 150,000 new Bitcoins minted. And earlier we talked about, those miners that, authorize and verify those blocks. But even though there were 150,000 new Bitcoins minted, there were actually almost 360,000 Bitcoins that were purchased during that same period. So you have this huge imbalance right now, right? Because a lot of people want Bitcoin. They can't mine it fast enough at this point. So that's creating all these supply and demand issues, which are, increasing prices specifically with Bitcoin. And people see, this imbalance is going to continue going forward with all this excitement. And you also now it's easier to buy cryptocurrencies now. There are more exchanges, there are more companies that allow customers to trade Bitcoin. Like Robinhood, that app that got in all the hot water over GameStop.
Sure.
People can use that to buy cryptocurrency. Square, even PayPal. So there are a lot more opportunities to actually buy cryptocurrencies than there were even a few years ago. And yeah, it's just created a lot of people that are just really excited about this. And is it worrisome? Is it troublesome? Is it concerning? Absolutely, because a lot of these people are very inexperienced. A lot of people really don't understand how this cryptocurrency works. And again, like, do you want this to be a currency or do you want it to be a commodity? Because really, anybody that's taking a vested interest in this stuff really needs to figure out, well, where do they stand on this? Because if you're looking to buy crypto as a currency, that's going to be a very different approach to buying cryptocurrency as a commodity, something that you hope will go up in value and you'll be able to get rich off of. Totally different approach. And
Sure.
I don't think people really understand that. And also just even blockchain and just the implications of that, like, how is this all really going to play out in the future? I don't think anybody really knows ultimately if crypto is going to endure and what that's going to look like, or will a government come in and kind of take control of it? Will it somehow, shape, or form become regulated like other currencies? And we talk about, it's this decentralized currency and there's no higher authority to it. There's no government. It can't be devalued like that. But yet you have these miners. You have these miners and they have a vested interest. They're getting paid for it. They have a profit motive. So where do they fit in all this? And I don't know that I'm really comfortable with that whole model either, that you have these miners that are paid to verify transactions. That creates, some uncertainty in my mind. So
yeah,
the risks are many.
I got to ask you too, what do you think is going to, we do have a limited supply. These people are getting paid to mine this, and the majority of it has been mined. What happens when they get to the end of the road?
Well, that's a really good question. And that's what's interesting too, because what they're doing is they just split it down. They just break it down into smaller pieces. In fact, they've already done that. It can be, one Bitcoin can be broken down into like 8 decimal points. So they're
now
just
we're talking
creating
like stocks, right? Now we are talking about commodities.
We are. And what's weird about it is that essentially you can create an unlimited supply that way. And I just read a really interesting article about just the dynamics of that. Like, if more people start buying into Bitcoin, they predict that all the Bitcoin, those remaining 2+ million Bitcoins, will probably be completely mined in about 10 years, 10 to 15 years. No, 15 years. I got right around 2040. So more like, I guess almost like 20 years, they're saying roughly.
Okay.
So, but what happens then? And even like so Tesla bought some $1.5 billion. But what if like Apple and Amazon and some of these big companies like took a lot of their money right now and poured it into Bitcoin? Like, what would that create? Like, you'd have like just like all of this like monetary energy, like trillions of dollars of monetary energy would just be condensed into these 21 coins. And even if you break it down into 8 decimal points or 9 or 10 or 20 decimal points and basically just keep breaking it down, it would just create some really, really crazy dynamics in terms of the economy, in terms of the value of the currency, and how that would actually all play out, I think, is anybody's guess.
We've got just about 6 more minutes, Shawn, and I'm looking at your list of risks here, and I'm not really seeing a lot that's different from the paper money that I'm holding in my hand. I'm not seeing a lot of risks that I don't already identify with. And so I'm starting to think that, I don't think this is going anywhere. I think this is only going to grow. I think it's going to be interesting to see it morph and see it develop and evolve. But if I were scared of this, and maybe I was thinking almost an hour ago that digital currency isn't real, it's just made up, and then I think I'm seeing this list of risks. Well, the stuff I'm holding in my hand is made up. My kidney has intrinsic value. It has real value. But the $10 bill I'm holding in my hand, it has volatility. It's subject to inflation. You know, next week that $10 is not going to buy the same amount of gas at the gas station. It might buy more, it might buy less. People can steal it. Functionality, if I tear it in two or if I lose it, there it goes. It has no function at all. There really is no guarantee or backing. Like you said, it's been decoupled from any kind of gold or precious metals. Now, the minimal regulation, I think, you know, we kind of touched on that. It's going to be interesting to see what governments do with this, because in the battle between the individual and the government, it seems like the government always gets the upper hand. Eventually, they can step in and just say, we're not going to let you do this anymore. But you know, if you can buy a pizza with 10,000 of these things, how many pizzas can you buy right now if you've got one? Well, that's what, about 30,000 pizzas? And something like that. I don't know. Depends on if you're eating Totino's or Domino's, I guess. What do you want to leave us with? What should we walk away with? Kind of not just scratching our heads over, but really thinking about in terms of the future of digital currency.
Well, I think you make a really good point. And, you know, we look at all of this amazing technology and, you know, 15 years ago, the thought of just renting your apartment to a stranger for the weekend when you're out of town didn't make any sense, and people wouldn't have felt confident in that. And yet now they do. And some people would rather stay in an Airbnb than they would a mainstream hotel that has a manager on site and has a company standing behind it. So yeah, I think a lot of it is just, you know, some of us folks that grew up in a different time, yeah, we're leery. Yeah, we're skeptical. And I think as you know, younger people come into their own, it's not going to be that weird. It's not going to be that foreign. So this could go any way. It could work. I'm not saying this won't work. This could very well work. It really could. We could have a whole new way of making purchases and storing wealth in the next generation or so. But then again, it might not work. So I think my message really is, though, understand it. If you're going to get into this, if you're going to invest in it, or you're just going to, you know, really start following it, take the time to really learn about how these cryptocurrencies work, what the risks are, understand how this blockchain technology works and how it can be applied in other settings, and do some homework on it. Do some homework. Don't just get sucked into this crowd mentality, like the tulip investors you mentioned, like the people that lost their shorts during the .com bust, like the people that lost their tails back in 2009 when the subprime crisis hit. Because there's always going to be winners and losers in any of these financial situations like this. And you know, just do your homework, do your due diligence.
So you've got one last graphic here that I want to talk briefly about as we wrap up, and explain this to us.
Okay, so this is just a whole new area in terms of like how this digital currency is just kind of changing the world we live in and the potential for it. So this is actually a digital collage. It's titled The First 5,000 Days. And last week it was sold in a JPEG format for $69 million.
Oh, wow.
This was created by a digital artist. His name's Mike Winkleman, but he goes by the name Beeple. And now it was a little bit different. It was minted in what they call a non-fungible token, or an NFT. And this is just getting a lot of traction right now. Different from Bitcoin. It has a whole different structure to it. But essentially what it is it provides, through blockchain, it provides a buyer with a proof of authenticity and ownership. So in this case, this digital collage here, the person that owns it has exclusive rights to it. People have purchased sports highlights. Like there was one of LeBron James that just sold. And through blockchain and through this whole cryptocurrency thing, they have exclusive rights to it. So they could put it on YouTube and they could get views from it and they could be compensated that way. It's just completely taken the whole art market and like all these traditional art auction houses and just flipped it upside down like everything else. People are just scratching their heads like, oh my gosh, like what? You mean The days of sitting and painting a picture like Van Gogh and putting it in a museum, now you can just create a digital collage and put it on a JPEG. And it's just, we've talked about this, Russ. The world is just moving so fast. And that's the other thing I want to give a message to for any of you people like myself, age affluent folks. Just hang on, and we'll figure this out. But
we'll figure it out.
It's a little rocky.
We'll figure it out. We'll figure it out in our old age. Listen, my friend, I appreciate you coming and explaining this. This has been a real eye opener for me. I hear bits and pieces in the news, but you've really brought it home, and I thank you for your time and for your homework and your understanding. Folks, if you're looking for a financial professional, there is no greater mind in Indian country than Dr. Percap himself. Even though we're getting old, you know your stuff, buddy, and I appreciate it. Folks, thank you so much for joining us. I'm going to throw this over to our sponsor, and we're going to wrap it up for the night. Happy Bitcoin mining, everybody.
We're going to work on that coin.